I think everybody right now is trying to benchmark, am I competitive in this market, right? And this is one way to do it. You can look at what the MBS is doing. You can look at what online lenders are publishing, but we all know that rate tables and all these, I mean, they have multiple discount points. You don't really know what the disclaimers say. Some are based on really high loan amounts with, like the perfect unicorn buyer needs to, be involved. So Mortgage News Daily, is a really easy source to distill it down, but there's still some things about it that you need to understand. First of all, the compensation, I just talked about that. But the other piece that I thought was really interesting as I was reading through their FAQs is that because they adjust the interest rate that they're publishing for discount points, what that means is, and they actually give an example on their website, what this means is that it doesn't necessarily mean that people are quoting that particular rate at par. They've adjusted it to par. So let's talk about what that means in reality. So let's just say that the interest rate was 7%. It was slightly under that. I mean, last week it was like 7.96. I think on Monday or Tuesday, the week I'm recording this, it was at 6.85 or somewhere in that neighborhood. But let's just say 7% for the sake of this illustration I'm going to give. But one thing that is important to understand is that lower coupons, especially in a market like this, have more liquidity to them, and those tend to be the ones that are trading. So I'll give you an example. Like we're talking about rates around 7% right now, high sixes, whatever the case may be. I'm talking about an agency loan right now, a Fannie Mae mortgage-backed security, for example. But yet the coupon that everyone's watching, like if you use MBS Highway, which I highly recommend, or any other source out there, they're usually tracking like the 5.5% coupon. So you're watching the candlestick charts. We're all familiar with this, but it's the 5.5 coupon. And so let's say we have a rally in the market and you're looking at the 5.5 coupon and it rallies, 25 basis points. You're like, well, I should see a 25 basis point move in my cost on my discount points. But the problem is if you're quoting a rate that's close to 7%, well, that's not going into a 5.5% coupon. That's going to be going into probably a 6% coupon or 6.5 potentially, probably not a 6.5. That's going to probably go into like a 6 coupon. Point being is that there's limits on how far above or below that coupon you can actually sell that loan in that coupon. So if the 5.5s improve by a quarter, but the 6 or 6.5 only improves by nothing sometimes they get worse. It's really a weird phenomenon that can happen. Literally, you can see a 6.5 rally by 25 basis points. A 5.5 rally by 25 basis points. The 6.5 could get worse. And you're looking at, MBS Highway or whatever your service is, and you're like, I should see an improvement. But you're looking at the wrong coupon. And the only way to get into that coupon is to pay discount points, which apparently no one wants to do these days, right? And that's part of what I'm going to talk about today. No one is quoting interest rates with any amount of discount. And I get it to an extent, and we'll talk about that. But my point is this, is that if someone submits their rates to Mortgage News Daily, and let's say that they're using a rate of 6.25 with 2 discount points. Well, Mortgage News Daily is then going to adjust that to come up with what would be close to a par rate. And the best I can tell, they use a multiple somewhere around 4.3 to 4.6. And so that would take that 6.25 and using round numbers, let's say it's 2 points, and then we're using a 4% multiple, which I think it's even a little bit higher than that, but let's just say it was 4. That would take you to 6.75. So now you'd look at Mortgage News Daily and say, rates today are at 6.75. Well, rates today are at 7. And you're like, well, I must be out of the market. Well, not necessarily, because you could have probably done that 6.25 rate with 2 points, just like, the lender that sent in their rates, but you're trying to quote right off of par rate. And I know that this is confusing for people because most people's pricing engines just default when you go into Optimal Blue or whatever you use for your pricing engine, it typically will show you closest to par. And that's kind of where our eyeballs stop. But what we don't always take into consideration is if I moved deeper, the value of that rate would be much better if it's into a a better price coupon into one of those lower coupons. And so this is one thing that I think most people don't understand about a service like Mortgage News Daily. When you remove the discount points, then you have to then take into consideration what is the adjuster they're using to make up for those discount points. And now all of a sudden you're comparing yourself with a loan that's in a 6.5 coupon, let's say, to a loan that's in a 5.5 coupon and wondering why you're out of the market. And again, they don't give you all of these details, so I don't know how many of the surveys that a company like Mortgage News Daily got back that were averaging 2 points or 3 points or 1.5 or, who knows? You don't know. All they tell you is that they have a proprietary algorithm that calculates for that. And what I'm trying to explain is in that calculation, it's not going to be a perfect translation because the value is better at lower coupons.